Hi, Martin Lopez from martinlopez.com, and welcome to step 3 in the 3-step guide to home buying. So we've already covered how to find a real estate agent, get pre-approved, how to start your home search, go into loan processing, stay up to date with the paperwork, and now we're going to talk about the escrow. You've bought a house, it's time to open escrow. Exciting time. So the first step is to get your deposit check that you gave to your realtor with your offer to purchase, and we're going to have that check. Your real estate agent should have that check deposited into escrow. That would happen day 1. Then at the same time, you want to review your loan. What is the interest rate that's available right now? Do you want to lock? Do you want to float? Do you want to pay points to get the interest rate down? How much is the seller paying your closing costs? If they're paying anything, go in your down payment and make sure you have all your numbers worked out. At the same time, you want to get the appraisal ordered so that when your time to submit your loan, when it comes time to submit your loan, you are able to have the appraisal submitted with the loan, and the underwriter can review both of those, and you'll have an idea of what the value is of the house. So we've covered opening escrow, depositing your earnest money, review your loan, and order your appraisal. That's all on day 1. What you also want to do on day 1 is update any pay stubs, bank statements, and outstanding items that they've requested before. And you're also going to have the lender, the loan officer, is also going to request signed contracts, escrow instructions, preliminary title reports, and ask you to get your homeowner's insurance. The reason you want to get your homeowner's insurance done right away is it is almost always, I would say, on 90% of the transactions that I see other loan officers doing, it's something they do at the very end, and it ends up costing 2 or 3 days to get that done. Plus, depending on what you're paying for homeowners insurance, it's going to change your payment if you're impounding your payment. So if they're estimated $100 a month insurance and your insurance comes out at $60 a month, that's a $40 a month difference in your mortgage payment. I don't know about you, but I would like to know that up front. So that's all happening on day 1. All that paperwork is going to be reviewed and submitted to processing. And guess what? You're on your way. Exciting. Let's get this thing going. So one of the first things you're going to want to do, one of the things you're going to want to do next, rather, is in the first few days is have your property inspected. Here's a real estate agent showing you what that means to have your property inspected.
Your offer has been accepted. What you have to do now is investigate the property so that you can find out all of the things that you want to know about that property. And part of that is going to be the home inspection. In fact, that may be the best money you spend during the transaction, is having that home inspection done.
Another thing is you're going to look at contingencies. The contingencies are really, really important. What a contingency means is, if this happens, then I'll do this. If this passes, then I'll do this. I'll give you an example. If the house passes my inspection, I will continue with the transaction. If my loan is approved, I will continue with the transaction I'm doing. That kind of thing. If the house appraises, I'll continue with the transaction. There are some other contingencies, and we'll do a video, and you'll see what some of those are.
Right around the 17th day of escrow, it's time for the buyer to remove contingencies. That sends a signal to the seller that you are fully committed to the purchase of the home.
Once the appraisal comes back, all your paperwork comes back, we're going to go into underwriting. And underwriting is where we submit for an approval. It is where the underwriter analyzes everything, all your paperwork, your pay stubs, your bank statements, your tax returns, all that stuff. At that point, you get a loan approval. Now, the loan approval doesn't mean you're just ready to slide in. Most of the time, you're going to have conditions, underwriter conditions. So what we want to do is review and address those conditions. Those conditions are there to validate and confirm your approval, to clarify any questions that an underwriter might have, like what was this deposit in your bank for? Sometimes people take large deposits, move them around. So we want to make sure that all those numbers are all paper trailed, and any kind of bonuses you get, all that kind of stuff. And if there's anything with the property, they may ask for that stuff to be clarified as well. Now, we might be 20 days into the transaction now, and remember on day one, you updated your pay stubs, you updated your bank statements. There might be a need for some new updated bank statements and pay stubs and other paperwork that you might have. So remember, when you get paperwork, hold on to it. At this time, we're going to submit for your final approval. Everything gets signed off. Your loan documents are issued. And depending on the kind of loan, it could be anywhere from about 70 pages to about 150 pages. You're going to want to sit down, review those with your loan officer, your attorney, your escrow officer, whoever you're going to be, whoever's part of the transaction. In California, we have escrow companies. I know back east they use law offices, so you have attorneys. But in San Diego, you typically would maybe go over some stuff with the escrow company and your loan officer. What also happen is you'll have a notary come and sign that because there's paperwork that needs to be reviewed and there's stuff that needs to be notarized. Once the loan documents are signed, those will go back to the mortgage company. The mortgage company will then review those loan documents, fund the mortgage. It's usually through a wire. That money will go to the title company. The title company will let the escrow company know that the money's in place, and we will fund and record and close, just like we're saying on the video here.
Once the loan is funded, escrow sends over the paperwork in order for the deed to be recorded in your name. Once the deed is recorded in your name, the property is fully yours, your homeowner's insurance takes effect immediately, and you can get your keys.
After you fund, record, and close, it's time to move in. So what happens is you get your keys and you move in. Isn't that exciting? Thank you very, very much for reviewing step 3 of the 3-step guide to home buying. As always, if you have any questions, my name is Martin Lopez. I'm a loan officer with iServe Residential Lending. Feel free to connect with me on Facebook, LinkedIn, Twitter, or YouTube. And I can also be reached if you want to give me a call, if you have some questions, 619-838-1553, or email me at martin@martinlopez.com. Thank you very much, and I'll be sending you out one more video in a couple days. I hope you enjoy it. Thank you very much.